Yo, 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 what is up, stock compounders? We got B-Rad in the house. So, yeah, what's happening? What have I been into recently? So I've been doing some work on ASOS, okay? The company that Nick Sleep bought probably sometime in early 2020 with the proceeds from his sale of Amazon. There's actually a lot of content out on YouTube around ASOS. So I've been devouring what other YouTubers have been saying about it, and I'll probably put a video out on it either tonight or tomorrow. But yeah, it's interesting. It's a really interesting play. First, yes, the gentleman with the threes, love it. That's a unique username there. You are first. Congratulations. What else has been catching my attention recently other than ASOS? So Tom, Investing with Tom, put out a video, I think it was yesterday, about how he might construct a shameless cloner portfolio. And that really intrigued me. Okay, this is something I've thought about in the past. I think this largely came out of Tom's conversation with After Dinner Investor, and inspired by the report, Imitation is the Sincerest Form of Flattery, which was, a study that two university professors did on Warren Buffett. If someone had cloned Warren Buffett from, I think it was 1978 to 2008, how would you have done? Obviously, hindsight is 2020. Warren Buffett clearly one of the greatest investors over the last 50 years or so, perhaps the greatest. So when you're looking in the rear view mirror, it's easy to say, all right, here's the guy who's done the best. How would you have done by cloning him? But nonetheless, I think it's an interesting approach. Obviously, I find a lot of value, a lot of merit in cloning other investors. But what if, rather than using cloning as sort of a top of the funnel for idea generation, it was sort of a mechanical approach where you weren't even trying to understand the businesses, right? You just have rules that you follow for, all right, if the super investor buys in the most recent quarter, and the current price is within 30% or so of the low of that quarter, it's an automatic add to the portfolio, and you kind of go on through time like that. I find it a very compelling approach, actually. So I'm very curious to see how that unfolds with Tom's Shameless cloner portfolio. I'm compelled to do one myself, okay? Maybe even put a little money in it, right? Like have it be one of my test magic formula portfolio where, there's just about $100 a month going into that, something small, but something where over 3 to 5 years, I can actually have some results, right? To try to ascertain whether this approach will outperform the market as a whole over a long period of time. And the more little tests like that I can run, the better off potentially I'm going to be in the long run. Because, if it turns out a shameless cloner portfolio where I just turn my brain off and blindly clone, maybe a handful or 10 great investors, if that outperforms my picking of stocks, you guys, I have no ego in this game. I am happy to hang up my stock picking hat and just, do that blind shameless cloning portfolio, or do, the modified magic formula approach that I've been doing as well. So I'm trying to come up with the smartest kind of mechanical approaches to investing, to test those and see, how do I do against those over time? And, how does the index do against those over time? So there's kind of 4 or 5, strategies in the brew to see, how those shake out over time. I think there's a ton of value in that. And it's worth noting as well, Monish Pabrai tried to come up with something like this, sort of an automated mechanical investing approach called the free lunch portfolio, okay, where there were 3 baskets, right? One was in this cloner approach. So 5 stocks every year were kind of blind clones based on some preset rules. There were 5 spin-offs each year that were selected, and there were 5 cannibals, right? Companies that were aggressively buying back their own stock. And, you know, Pabrai tweaked it, right? He tweaked it over time. He seems to be putting more input into the process, right? It's not based on these predefined rules. He incorporates his judgment into deciding which stocks to incorporate into the portfolio. So, you know, that's a little discouraging in terms of the prospects for a blind mechanical approach. He doesn't seem to be convinced that that's the best way to go forward, at least based on how he had originally set it up. But I still think it's worth testing approaches like that, because the big advantage there is the idea is you're removing the human emotion, right? The judgment that involves all of our biases and emotions from making decisions about when to buy stock, when to sell stock, whether to trim. You know, there's all of these emotions, fear and greed, that are driving us. It's not just this rational, okay, here's what the price is, here's what I think the value is. We're not robots like that, right? Humans, we're these complex emotional, you know, we have the rational piece as well. But, you know, where the most money is made is when fear is highest or when greed is highest, okay? And that's when it's hardest to make rational decisions. So that's why I see so much value in a mechanical approach to really remove those judgments, those biases, those emotions when it's most important to remove them. So anyway, let's jump into the chat. We got a lot happening here. That's awesome. Karan, what's up? What's up, Karan? Good to see you, buddy. Jose, second. You might have been third, Jose. Tim, hey, everybody. Reebok CrossFit. Hey, I did a little CrossFit in my time as well. Good to see you here. Norbert Lou and Greg Alexander have been adding to Naked Wines lately. Well, that's compelling, right? Norbert Lou and Greg Alexander, some of the best investors out there. So I just want to take a quick peek at this in ticker just to see what I notice about those. Punch Card Management is Norbert Lou's. It looks like this month, perhaps, Norbert Lou added to Naked Wines. Okay, a 12% addition to Naked Wines, and it's a good chunk of his portfolio. It's 14% of Norbert Lou's portfolio, 4th largest position. Yeah, that's interesting. I may have to put that on my dive into list. Naked Wines. Let me quick look at Conifer Management as well, which is Greg Alexander's investment vehicle. So a lot of selling by Greg Alexander recently. There's a lot of red in the percent change in number of shares held column. Angle PLC is one he added to quite a bit. It's only a 1.2% of the portfolio. I don't see an addition to Naked Wines for Greg Alexander. I actually see a reduction, but maybe that hasn't been updated because that's a reduction as of May 17th. Okay. So ticker, sometimes it takes a little bit of time for them to update the data in these guru portfolios. So let me know where you saw that addition from Greg Alexander for Naked Wines. I'd be curious to see that. But yeah, Naked Wines. Maybe I'll have to dig into that one. Thanks for that that poke. We got a super chat from Pravesh. Thank you, sir. Appreciate it. Appreciate it very much. Doesn't look like we had a question from Pravesh. Just giving a shout out. Appreciate it, man. Appreciate you. Okay, where are we? Would love to see your opinion on Naked Wines. Yeah, I think I will look under the hood of that. Gonna jot down a note to myself right now. Naked Wines. I know there's some people I follow on Twitter who are into Naked Wines as well. I can't remember who was that investor who was into Naked Wines that I saw on Twitter. I can't remember at the moment, but definitely some people involved with that one. Michael from Cambridge, UK. What is up, Michael? Michael, curious if you have a take on ASOS or Boohoo being in the UK. ASOS is something I'm diving into. You guys will see a video from me shortly on ASOS. But as someone who lives there, where ASOS really got its start, I'm curious if you have any thoughts on that, Michael. Jonathan, Brad, have you looked at Boston Omaha? No, Boston Omaha, it crossed my radar at some point. As there were some value investors that I respect who seemed intrigued by Boston Omaha. Let me just see if there's any kind of Value Investors Club write-up. It looks like there's some short theses on Boston Omaha. Those aren't super recent. 3 years ago is the latest one. But I haven't looked at Boston Omaha at all. Let me just see what they do. Boston Omaha. BOMN is the ticker. Outdoor billboard advertising business in the Southeast US. Okay. Billboard advertising. Also involved in insurance and brokerage, broadband investment business. So it looks like they're kind of all over the map. Maybe it's like a holding company of sorts. Digital billboard advertising. Yeah, I haven't looked at it. I guess you could make the argument, even with all of the digital advertising through Facebook and Amazon and Google, all that stuff, there's still a place for billboard advertising, right? Whenever you can get in front of people that are, driving along the highway or whatever, there is value to that. But it's not really an industry that I'm familiar with. I've never made an investment in the advertising industry, so not really on my radar. But let me know in the chat if what your elevator pitch is for Boston Omaha, Jonathan. If you are going to look at tickers today, would you look at Lindt chocolate in Switzerland? LISN. I'll take a quick peek. LISN. I do have a place in my heart for chocolate, I will say that. Under the products of Lindt, Ghirardelli, ooh, wow, okay. Russell Stover, Whitman's. So it looks like Lindt has perhaps acquired a lot of other prominent chocolate brands. Very old company, founded in 1845, okay. What has the revenue been like over the last 10 years or so? Let's take a look at that. Yeah, okay, so it's growing, not fast. I mean, over 10 years, it's grown maybe 50%, something like that. So, mature, probably in the mature stage of its business. What are the margins like? Quite high. Wow. In the mid 60s% there. And then you got operating margins, still pretty healthy, in the 10 to 15% range. So for a business like this, my go-to cloner would probably be someone like Fundsmith. Okay. They're really looking for businesses that have been around forever. They've got these high gross margins. I'd probably dig into the return on capital employed, just try to get a sense for how strong those numbers are. What is the free cash flow yield? That's what comes to mind with Lint. That's probably the angle I would take on it. Does Fundsmith own it? And if not, I'd be wondering, well, is it worth owning if Fundsmith doesn't own it? Because this seems like exactly the kind of business that Fundsmith would love to own, assuming the numbers are compelling. So what's the market cap on it? 29 billion. Okay. So it's really bigger than what I'd like to have in the portfolio. I'd love to be on the earlier end of the growth runway for new holdings in my portfolio. That's not to say I would never buy a 29 billion market cap company. It wasn't long ago that I added Alibaba to the portfolio and Prosus, which are both larger than Lint. But those are some thoughts on it. Jose, is Nick Sleep wrong about ASOS? Well, I tell you guys, when you have a CEO who leaves, effective immediately with no replacement lined up, that's concerning. Okay, that is a big deal. So, so much of what I'm going to be looking for in the investment case for ASOS is who they bring on as the replacement CEO, and what is the track record of that person? What have they done over the last decade or two? It's a huge part of the thesis for me. You could make an argument it's so cheap right now that it's the downside is fairly muted, but there's some headwinds that ASOS is facing. One of them is being in the UK. There's so much outflow of capital from the UK, and this was pointed out in one of the videos I watched recently on ASOS. Invest. I can't remember what the name of the guy is. But if you look at over the last 5 years, the market, the stock market in the UK, how much money has flowed out of there. This investor was of the opinion that was largely due to, there's not many tech companies in the UK. And so, there's kind of money chasing those tech high flyers, right, in the US and elsewhere. And the IPO scene in UK isn't very healthy, right? There's not many IPOs, and so people get excited about those as well. So there's money leaving, kind of chasing the new hot IPOs as well. And what happened with Brexit, right, in 2016? People are kind of losing faith in the markets over there, partly because of Brexit as well. So definitely some headwinds, but I think it's worth digging into. I think ASOS is well worth digging into. My understanding is Nick Sleep still owns it, at least as of recently. I don't have recent, super recent, like since the CEO announced his departure. That could have been a big deal, right, for Nick Sleep. We don't know. But it looks like Nick Sleep's business partner at Nomad, Case Zakaria, also added to ASOS recently. And he originally went with Boohoo. It sounds like Nick Sleep went with ASOS, Case Zakaria went with Boohoo, and it sounds like Zach is building a position in ASOS now as well. So just some data points there. Neil, hi Brad. Stephen Romick from FPA Crescent Fund just bought 5 million BABA shares in Q3. Your take on that? Yeah, I noticed he filed the 13F early. FPA Queens Road Kansas. No, that's probably not the one. That's a small cap fund. That would not be. Here it is, FPA Crescent Fund. So let's see what we've got. Prosus, wow. Added 150% to Prosus. Okay. SoftBank added, Alibaba added. So Baba, he added like 8x, okay, increased his position like 8x. So still, it's only 1.5% of the portfolio. I don't really pay much attention to Stephen Romick. Let me know in the live chat why I should. But looking at the FPA Crescent Fund, the highest conviction holding is less than 5% of the portfolio. Okay, so this is, it's not a concentrated portfolio. It's more, from my understanding, it's more like capital preservation mode, to be, heavily diversified. So it's not one I would pay attention to from a cloner perspective. Yeah, that's my take on that one. But now I'm curious. I'm going to search Prosus to see which other funds own it. So Sequoia, it's 3% of the portfolio. Prosus is. I don't think I knew that. So that's interesting. And then, the second highest conviction is Stephen Romick at just shy of 3% of the portfolio with the recent ad in Q3. And then Christopher Davis, less than 1%. So, we're seeing more and more action with Prosus from these super investors. Still on the quieter side, but it'll be interesting to see, if that continues dropping in terms of the Prosus share price. We might see more and more gurus piling into that. Tim, mechanical cloning, hashtag mechanical cloning. Yeah, I may have to run a thread with that hashtag in Twitter, see what happens. I am bullish on mechanical cloning. Obviously, it has to be done well, right? Thought has to be put into what are the rules for cloning, because there's a lot of ways I think you can kind of hurt yourself doing that. Marco, would be great to hear your take on ASOS and its supply chain. Yeah, I haven't gotten really into the supply chain issues with ASOS. One of my big questions for ASOS is, how much has ASOS put into building out its own supply chain in terms of building resiliency into that and really planning for the long term to deliver value to customers, right? To be able to lower prices over time while still generating, healthy profits for shareholders and to grow the business. So I don't have any thoughts on the supply chain at the moment, but it's a big question in terms of wrapping my head around the investment thesis for ASOS. Copy Traders Club. Brad, you are a closet copy trader. You just don't know it yet. Trader, I have a little bit of issue with the term trader. I think of short term when I hear the word trader. I'm more of a coffee can guy where I just want to stuff those stocks into the coffee can like Grandpa did and forget about them. Okay, I think I'm probably better off from a long-term return perspective, not muddling too much in the day-to-day, the quarter-to-quarter business, results and noise in the short term. I want to really put the effort into identifying what do I think are going to be, great businesses in 10 or 20 years, right? Still, hopefully they're great today. Maybe misunderstood today, and that's why I can get them at a decent price. But what's going to run, right? And the issue with looking in the short term, right, at least following the business very closely, is that these great long-term winners like Amazon, Nvidia, there's a lot of Apple. It's hard to imagine even Walmart, right? If you look at the stock price history, and you look at quarter to quarter, business performance, even there's some hiccups, right? There's times when people who are following those companies very closely definitely had reason to head for the hills, right? To sell. And that would have obviously been a mistake with these companies. So it's hard, right? Because you want to stay on top of the business. You want to make sure it's still a compelling investment opportunity. You still believe in the company. You still believe in management. But you don't want to pay too close attention, right? The key is really figuring out, okay, what is worth paying attention to? What are the KPIs, right? The key performance indicators that matter to the long term of that business, and just ignoring everything else. And that can be a tricky thing to do. So yes, I'm a closet copy investor, I would say. Jose, who is Norbert Lou? Worth to clone? Norbert Lou is the operator of Punch Card. I forget, Punch Card Management, I think is what it's called. It is worth looking at Norbert Lou. So there's not a lot written about Norbert Lou. He's very kind of off the radar. But there was a pretty good report. Let me see if I can find it. Norbert Lou. I even tried to look up his investing performance as I was doing research to come up with a list of clone-worthy investors. I couldn't find anything. I mean, it's really tough. So rare interview from Value Walk. Okay, back in 2018, Norbert Lou did an interview, and maybe I'll just pop this. Oh, is it behind a paywall? That's annoying. Well, there is one that is accessible somewhere. One thing I really love, so he is worth looking into. One thing I really love about Norbert Lou is how concentrated he is. You know, Monish Pabrai has about 10 positions, which, you know, from many standards, that's quite concentrated. Okay, especially when you're managing other people's money. Norbert Lou has 5 holdings. Okay. And one of them is just like 2.5% of the portfolio. So basically 4 kind of high conviction bets Norbert Lou has: Ally Financial, Berkshire Hathaway, Winnebago Industries, and Naked Wines. Okay. So whenever someone is this concentrated, and, you know, I think he has a great track record. I haven't actually been able to look it up. As of 2018, I think it was pretty strong. I think in the article, if you guys dig for that article, if you find it, post it in the live chat. Hopefully YouTube won't you know, exclude that because there's a link in it. But he's worth digging into. And I love these really concentrated investors because they're super easy to clone. Okay, they don't do anything very often, like Charlie Munger. I think Alibaba was the first thing he did in his portfolio in terms of new additions in like 10 years or something, maybe more than that. I like that. Okay, I like investors who are very patient and very, you know, unreasonable in a way, right? They're waiting for that fat pitch. They're waiting for the cinch, as Charlie Munger says. That's what I want. I want to look at the cinches from the best investors in the world. Okay. And if that's all I spend my time doing, I get 2 or 3 cinches a year that come across my desk. Maybe I pick one of them. That sounds great. That sounds great to me. I can be a gentleman of leisure and still crush it in my investment portfolio. So yeah, take a look at Norbert Lou. Barry, hi from the UK. Would be interested to hear about Boston Omaha. Looks like a mini Berkshire Hathaway. Yeah, could be. I don't. I haven't looked at Boston Omaha. Now I'm curious about the market cap. How big is Boston Omaha? It is small, about $1 billion. Okay, $1 billion in market cap. So. And what have the revenues been like over the last 10 years? Wow, that's spicy. So it's a pretty impressive growth curve. There's only data from 2013 in here. And there's actually no numbers for 2013 or 2014. So revenues start in 2015. And it's a pretty nice looking growth curve, to be honest, through 2020. So yeah, curious if anybody knows about the CEO of Boston Omaha and what that track record is, what's compelling about the CEO. Let me know in the live chat. Michael, if you had to withdraw 1% of your portfolio to pay for something personal, would you sell something that is your largest position or the one with the lowest CAGR from today's prices? Yeah, if I had to sell something in my portfolio, to pay for a personal expense or whatever, I don't think I'd look at the returns. Okay. If I were forced to look at the returns, like I can only decide based on what the returns have been, I would probably look at one of the poorer performers, okay, rather than borrowing from my top performers. Even though, seemingly there's a lot more capital, right, in the top performers, right, because those have grown. But don't cut the flowers to water the weeds. I think that was a Peter Lynch quote. I am full on bought into that concept. But I think the most rational thing to do would be to look at, all right, what are the long-term prospects of the businesses in my portfolio? Okay, and I would just take money from the one that has the weakest long-term prospects currently, which may be my most recent addition to the portfolio, right? Because that's probably the company I understand the least. But obviously, if I bought it most recently, I probably think the prospects are pretty good. So it's a tricky question. Someone on Twitter recently, who was it? Tim Lamb out of the UK. Tim said, I really like, I think it was persimmon. I can't quite remember. Maybe it was persimmon that he really liked. And, he wants to put more and more money into that, but he doesn't know, what to sell in his portfolio. So I suggested, well, just sell a kidney, right? You've got to, don't touch the portfolio, right? That's sacred ground in a way. Figure out how else to raise funds to double down on persimmon. And don't quote me on persimmon. I'm not sure. You can check him out on Twitter just to see what he really likes more and more every day and wants to add to. Let's see. Would you consider getting Leap instead of stock? For example, a 2-year Leap of Micron. It's funny. Before I ever owned Micron, I was buying Leaps in Micron. Just kind of an experiment. It went really well. I can't remember where the stock price was. I think it was in the upper 30s, lower 40s when I was buying Leaps. And, it was very volatile. Okay, it would go up to like the 60s. And that just worked wonders for Leap option prices. So I did well, kind of trading in and out of Leaps with Micron. But here's the big thing with Leaps. I'm less and less interested in Leaps as time goes on. And the big reason for that, you might think 2 years is a long time, right? But there's a finite end when it comes to Leaps, okay? There's a crunch time where a decision has to be made. In a way, time is working against you. Because, there's nothing, even if you buy at a discount to what you think something is worth, there is no law like gravity, right? There's no law that says, the price has to converge with value within 2 years, okay? It can take longer than that. So even though 2 years might seem like a long time for that delta to converge between price and value, it still makes me uncomfortable. So, I don't own any Leaps now. I don't plan to. I just do, even 2 years. It's not long enough for me to be comfortable. And it also, it incorporates like a like a trader kind of vibe in me. It feels short term, even though it's 2 years. It feels like, okay, I need to make a decision at some point before those options expire or that they expire worthless. And I don't like that pressure to have to make a decision within a certain period of time. In my regular, long stock portfolio, I don't have to make a decision. Okay. Ideally, I just go to sleep and I wake up in 10 years and I look at the portfolio and hopefully it's done incredibly well. That suits my temperament. So that's where I'm at with leaps. I'm sure that, there's smart ways to play leaps. You can look in the yellow book, right? The what is it called? You Can Be a Stock Market Genius by Joel Greenblatt. That's something that Tobias Carlyle recommended to people who wanted to get into leaps, right? There's some kind of intelligent approaches to leaps kind of laid out in that Greenblatt book. And I'm sure there's all kinds of places online you can find strategies around leaps. I just don't think it's my game. It's not suited to my temperament. Fahad, energy looks great for 2 years. Yeah, it's hard for me to argue with that. Again, I don't want to make 2-year bets. So that's why I'm not really looking in the energy space. But I'm sure, people who know that industry can do very well playing those kinds of investments. So definitely wouldn't fault anyone for playing there. Pravesh, thank you. Absolutely. Pravesh, thank you again. Michael, Ray Dalio says crash is trash. Yeah, I was just, I think, who was it? Hamish just put out a video on Dalio saying cash is trash this morning, I think. But if you don't have anything in your wheelhouse at margin of safety prices, what would you do? Make money while you wait like Charlie or accept lower return on part of the portfolio? So Dalio is coming from a totally different framework, right, than a concentrated stock picker, value investor type framework. So, be careful with that, right? You've got to understand the framework that Dalio is operating in to really understand what he means when he says cash is trash. For Dalio, cash is trash because, the approach that Dalio uses, this heavily diversified approach, it doesn't really make sense to hold cash. Okay. But for someone like me, for someone like a lot of you probably, where we have a pretty high bar, right? We need, our expected returns on any given investment to be, 15, 20, even higher % per year on a compounded annual growth basis. So, if we're making bets like that, it's no problem at all to hold cash for, even a year or two. Okay. At least from my perspective, there's been a little disagreement about this in Punch Card where Karan, kind of agrees with my perspective on that. Frank, has a different take on it. I don't know who's more right. That we just have opinions on that. But I'm perfectly happy waiting until there's a great opportunity that's right in the strike zone before swinging. Yeah, that's what I have to say about that, Michael. Thanks for the question. PCG to the moon, right? So we've got public utility in California, Pacific Gas and Electric. We've got a bull on Pacific Gas and Electric. Fair enough. Sebastian, hi from Germany. Have a great day. Thank you, Sebastian. I appreciate all the value you've been bringing, Sebastian. We've been chatting on Twitter, DMs. If you guys have any investment ideas or you just want to bounce something off me, hit me up in Twitter DMs. My Twitter direct message is open. Really loving that platform as a way to connect one-on-one with people. So good to see you, Sebastian. Ravinder, hey, thanks for doing this. Absolutely, Ravinder. How are you? Yeah, how am I? Let's see. it's raining, I think, for the first time in a long time that I can remember here in Northern California. So it's a little dreary out today, but I'm okay. I'm okay with that. Because it's, in a way, it's new, like it's fresh, even though it feels a little dreary. It's like, okay, this is something different. I can kind of, just cozy up today, get in my warm, comfy clothes, sit in front of you guys, have a chat. So I'm doing good, feeling like I'm in a little bit of a cocoon here, safe from the elements out there. And the plants are all getting watered. So, and they need it right here in the California Mediterranean climate. It is dry for so long. I can just feel all the plants sucking up that lovely, life-giving water. So it kind of makes me happy. Baba to the moon rocket ship. Hopefully, go Alibaba Cloud. I got big hopes for Alibaba Cloud. There's actually a book I posted on Twitter recently, Being Online. Okay, it was written by the architect of the Alibaba Cloud. Okay, so this is a book at the top of my list of things to read. Unfortunately, it's not on Audible. Most of the books I read, I listen to, which isn't great because I'm not a great auditory learner. I learn much better visually, or if I get them both. Like, one thing I used to do before I had kids is I would listen on Audible and read the physical copy in front of me. And that was fantastic. Just felt like I was getting so much more. But I may just have to buy Being Online and sit down and read it. So that's on the docket. David, I've been watching your videos for the past few months. Awesome. Thank you. Informative, helpful, and humble. Yes, I try to be humble. It's not that hard because, in many ways, I'm a beginner here in investing. So just keeping that at the forefront helps me avoid stupid mistakes and, keeps me open. Christian, greetings from Denmark. Keep up the good work. Awesome. Christian, thanks for being here. We're going to keep on keeping on. This is more and more fun every day for me. So no end in sight. Smooth sailing. I wouldn't touch Micron. China is their biggest customer, and China wants to make their own. Yeah, it seems I saw something recently. I think it might have been on Twitter. I don't remember exactly, but it looks like China is making progress with their chips domestically. So it is a threat potentially to Micron. But I still think there's some solid tailwinds over the next couple of years, at least for Micron. Micron isn't a coffee can position for me. It's not something I'm going to stash away for 10, 20 years. But I like the short to mid-term prospects for Micron. I think it's going to be tough for China to catch up to Micron in terms of the technology that Micron is manufacturing. But it is a risk. Baba is making chips. Okay, cool. The gentleman, ever looked into Proterra EV buses? Yeah, I looked at Proterra. I think it IPO'd not that long ago. I would love to have my entire portfolio be in companies that I think are really transitioning the world from a fossil fuel energy economy to one that's much cleaner, one that's much more sustainable over the long term, to our air quality, to climate change, to water quality, all of that stuff. But I am very cautious when it comes to these green businesses, at least from an investment perspective. On that front, I think I'm more likely to take the approach of Terry Smith, where I want to see who has won before making that investment. Okay. because it's so competitive, right? EV buses, it's so capital intensive. Um, it's a very nascent industry, and it's very dangerous to be an investor in a nascent industry, right? You look, say, when search engines were just starting, right? Back in the early 2000s, there were so many search engines, okay? There were so many internet companies, and most investors lost their shirts trying to invest in that industry, even though it was clear, to a lot of people, hey, this is the future, right? But there's a big difference between this is the future and here are the winning companies that are going to make you money as an investor in the future. Okay. Huge difference. And that's kind of the perspective I have on, electric vehicles right now. I'm very excited that industry is, expanding rapidly. But as an investor, it's way too early for me. Smooth sailing, buy BABA instead of Micron. How about both? I own both, very, very large positions in both in my portfolio. CChap, I'm also from the UK, have owned ASOS and Boohoo for the last year or so. Awesome. I think that's smart. It seems like a lot of people, when it comes to investing, it's an or, right? It's like, okay, do I like Facebook or Google? Do I like, you pit two great companies against each other in any given industry, ASOS, Boohoo. Why not just own both, right? We don't need to decide if we have two very compelling players in an industry. I always find it strange when I see investors, talking about it like, okay, it's this or this. We really don't have to make that kind of decision. Sebastian bought the latest dip on ASOS, but only a small starting position. Yeah, it sounds like you and Hamish are in the same position with that, just kind of dipping in to ASOS. Monique Pabrai, talk about spawners. Do you think small cap companies that have those characteristics are bound to have exceptional return? Absolutely not. No, I don't think anything's a given in the realm of business. It's very competitive, right? And so I like to look for these signs that give me an edge in picking the winners. Okay, and what are those potential indicators that there might be a winner versus all of the companies that are going to lose? Does a great investor own it? Okay. Does the management team have skin in the game? Are they also equity owners, right? Like we are, if we invest. So there's that alignment of interest. Those incentives are aligned. But no, nothing is a given, right? If it were a given that these small cap spawners were going to win, they'd be priced in a way that would price out all of the potential upside. Okay. So, we still have to turn over a lot of rocks and, find the opportunities where the odds are stacked in our favor. And that's not an easy job, but that's the job we've signed up for as concentrated value investors. Michael, can you point me to the source that helped you become bullish on Micron and form your thesis? I know you like it at today's prices, but I need to understand why. Thanks. Yeah. So Micron, you can look at Andrew Rosenblum from Bonsai Partners. Did a very nice write-up on Micron I think it was in 2020, maybe it was 2019. But if you go to Bonsai Partners letters, you can see all of the past letters. And right there on the page, it should say, that Micron is one of the theses that's kind of discussed in that particular letter. So check that out for Micron. And I know I saw another compelling write-up on Micron. Well, you might listen to Value Investor TV. If you go to YouTube, you can find Value Investor TV. Just search Micron for them. And there's this guy, I think he's in South Africa, who's an investor in Micron. He's done write-ups on Seeking Alpha about Micron as well. I've appreciated his perspective on Micron. And the last guy, Nitin Sacheti, did a presentation in MOI Global, Manual of Ideas. It's probably not going to be accessible if you're not a member of MOI, but perhaps Nitin has talked about Micron elsewhere, not just MOI. So you might just search him. He's also on Twitter. So possibly you could hit him up on Twitter and see if he might be willing to have a conversation with you about Micron. So those are some ideas. Smooth sailing, I wouldn't touch Micron, trust me. Okay. Jack, Tweety Brown took a stake in Tencent per the latest 13F, which appears to be the only super investor to do so in the OTC stock, excluding those who have ownership through Procy or NAS, right? Procis or Naspers. There you go, Tweety Brown, TCEHY. Let me just double check on Dataroma. So Tweety Brown, it's a 1% position in the portfolio. Again, Tweety Brown, not a concentrated portfolio. So this isn't someone that I really look to for new ideas. Added big time on Baba, like an 8x in terms of the position size, but still 2% of the portfolio. So yeah, added to Alibaba, Baidu, Tencent. Yeah. So like I said, I mean, there's a lot of investors on Dataroma that have, very diversified portfolios where the top holding is less than 5% of the portfolio. I don't really pay attention to that. I'm looking for those high conviction bets. Let's see, Joe, Brad, just giving you a poke. On USA Today, look at how New York Times was a 10-bagger with flat revenue in the past decade. NYT, a 10-bagger with flat revenue. Let me check that out. The New York Times company over the last 10 years. Is that right? So I'm seeing that it was a 7-bagger over the last 10 years, 22% compound annual growth rate. Still very impressive. So I think New York Times, they figured out really how to go digital, and that saved the business from my perspective. Most newspapers weren't able to make that transition. But New York Times, I think really put a lot of focus on making that happen. And they were early enough in the game to do that, I think it saved them. So that's compelling. 7x in the last 10 years. Good job, New York Times. Let's see what else. Quasi, Brad, PCYO should be right up your alley. You can look at it from the real estate perspective, SRG, or your flips. PCYO. So PCYO is like a real estate water development company in Denver, Colorado. Should be up my alley. Yeah, maybe. PCYO, Pure Cycle Corporation. This is one that I saw being bought in a corner of Berkshire and Fairfax a while back. Market cap under 400 million. Okay, so it's small, which is great. It's probably too small for anyone in Dataroma to own it. Yeah, well, I don't know. I think at that market cap around 400 million, it's feasible that some of these great investors in Dataroma could own it if they wanted to. So, I want to see a super investor in it, but before I really allocate some energy to digging into it. So Kwesi, if you know any great investors who are invested in PCYO, I could also just take a look at the ownership tab in ticker to see if I recognize anyone in here that owns it. Vanguard, BlackRock, Mark Harding, I'm guessing is on the management team. He owns 3%. Yeah, so there's nobody in here that I recognize from an investor perspective. Yeah, I'm a pass until I see a great investor get involved. That's just an easy way for me to exclude opportunities and have the time to really dig into the ones that are more worthy, in my opinion, of digging into. And Schumann, Brad, I think looking at it trend-wise, girls no longer buy from ASOS, they buy from Shine. What is Shine? Let's see, SHEIN. That must not be the ticker because I don't see that. Yeah, I don't know what Shine is, but I mean, looking at the trends, looking at the sales trends in ASOS, it's pretty steady growth in the UK, the EU, the US. So it may be that girls, are buying less and less from ASOS, but the growth is coming from somewhere. Okay, so I don't much care where it's coming from. I like the growth numbers for ASOS. I think the online fashion retailers are kind of just like the offline ones. What's hot today might not be tomorrow. I think that's probably true. You've really got to stay on top of the fashion industry. It's fickle, right? The customers are fickle. But ASOS has a strong track record. It seems like they've been able to do that. So there's no reason for me to think that they won't be able to keep up with that into the future. But I don't love to be in a fickle industry like that, where the customers are quick to kind of jump to what else is trendy. But there is one thing I really do like about ASOS is they have that Amazon Prime kind of model where you've got your annual subscription to ASOS for like £10 per year. And then you get that free fast shipping. Okay. I think that is a very smart way. I mean, it's a money losing endeavor at the moment for ASOS, but I think it's a very smart way to build long-term loyalty in a business. So maybe that can kind of help combat some of those challenges around fickle customers and quickly changing trends in the retail industry. That's just my quick take on that. Matt, do you use retained earnings in your analysis? Buffett says he uses it, but I find a lot of companies' retained earnings don't add up to income less dividends. Confused on how to calculate it. Thoughts? Yeah, retained earnings. It's something I kind of dipped my toe into. I think when I was looking at, was it the 10 cap method? It was one of the methods that I picked up from Phil Town that I was using retained earnings. It's not something that I pay too much attention to. But again, I want to constantly add more and more tools to the Swiss Army knife. And so it's something I want to better understand and better be able to analyze on a company's financial statements. So unfortunately, Matt can't give you a whole lot of guidance on how to digest retained earnings or how valuable it might be for assessing a business. But yeah, it's something I've been thinking about a little bit recently as well. So, maybe I'll put out more content on that soon. Emeka, thank you so much for all this knowledge and information. Thank you, sir. Guillame. If you own a retailer and in your projections of free cash flow, you included the opening of new stores, would you include the cost of new stores in maintenance CapEx because you need it to achieve your expected growth. Would you include, if you include the opening of new stores, would you include it in the cost of new stores and maintenance CapEx? So it would just be in CapEx, okay, total CapEx. I'd be more inclined to see it as, it's more of like a one-time CapEx event. So, it's not going to be maintenance CapEx. It's not going to be one of these long-term recurring CapEx items. And that's something I'm grappling around with ASOS is, CapEx has been so all over the place as they implement this growth strategy to really dominate fashion online around the world. So it's something I'm grappling with. But yeah, I'd be more inclined to, as long as they have enough cash on the balance sheet, that the balance sheet is healthy enough to take on those one-time big expenditures for establishing new stores, new warehouses. In the case of ASOS, it's not something I'd be inclined to factor in long-term. Mike, IBM and their spinoff. I haven't been paying attention to IBM. I didn't know IBM was doing a spinoff. So tell me more about that. If you guys have any quick questions, we're getting towards the end here. It's been 1 hour and 1 minute. If you want anything right at the end for me to answer, hit up that super chat, and I will be sure to tackle that before I sign off for today. I also had a suggestion last time. A lot of you are chatting with each other in the live chat, which is awesome. And I got a message that it was a little disruptive that I just ended the live stream last time when I was done. And then you guys weren't able to finish kind of chatting with each other in the thread. So I think after I'm done talking, I'll just maybe leave it for 5 or 10 minutes so you guys can continue the conversation in the thread. Hopefully that's valuable to some of you. Oh, we got a super chat. What do we got here? Is this another one from Pravesh? Pravesh, you are a very generous human. Thank you, sir. Doesn't look like there's a question associated with that. So thanks for supporting the channel, my friend. We'll just keep going. Wow, there's a lot in here. I'm scrolling up to where I left off. Let's see. I missed MTDR and INMD because no one was investing on it. I was having second thoughts. Worst mistake I've made in the last 18 months. So we're going to miss things, guys. I am perfectly comfortable missing things because my criteria for looking at things is set so high, right? I need a great investor to be involved. Ideally, I want it to be founder-led. I want a lot of skin in the game from management. I don't want much debt on the balance sheet. So there's a pretty high bar in terms of things I want to even look at. So I'm going to miss things. Of course, I'm going to miss things. But, investing isn't a game where you're graded based on the things you miss, okay? We learn in school that if we miss something, that gets docked from our grades, right? But that's not how investing works. I can let all of the great opportunities go by. And as long as I swing at a couple that do very well, I'm going to be very happy at the end of a decade, 2 decades, 3 decades. So I am perfectly fine letting things go by and looking back at them and thinking, these have been incredible performers, but they just weren't in my sweet spot. Okay, they weren't for me. They weren't for me. I think that's really important to have that framework when it comes to investing. Otherwise, you're just going to be looking at whatever does incredibly well, right? That's what you're going to be focused on, and you're going to be beating yourself up. And that's really just a game of envy, okay? That's a game of what could have been. That is not a winnable game. Okay, that's just going to make you miserable. So I try not to play that game. Sebastian, have you ever looked into Fulgent Genetics? I have not looked into Fulgent Genetics. It is one of the fewer cases that has shown up on Magic Formula when I ran the screen last year, but then again when I updated my list this year. Just going to take a quick peek at Fulgent Genetics. What have we got here? Provides pandemic testing and genetic testing services to physicians with clinically actionable diagnostic information. Okay. Yeah, this is kind of a hot industry right now, a hot sector. $2.5 billion market cap company. Let's see what the revenues look like. You know, there's not much in the way of revenues. I mean, 2020 was pretty good. The last 12 months have been pretty good for Fulgent Genetics. But on a valuation perspective, oh, wow. So enterprise value to EBIT, it's less than 3. Okay, so that makes sense why it would show up in the Magic Formula. It's not really an area that I have any particular ability to understand what this company does. Healthcare providers and services. I kind of side with Monish Pabrai in that, you know, I don't really want to play in the healthcare space because it's not a free market. Okay, there's a lot of government intervention when it comes from healthcare, which can be, you know, dangerous from the perspective of an investor. Okay, when you don't have kind of free markets operating. So it's probably not something I would look deeper into, but interesting that it showed up in Magic Formula. Okay, we'll take 2 more and then we're done. Prosus is Tencent at single-digit PE. I like that framework, Parush. That's very concise. Prosus is Tencent at single-digit PE. Now, one thing the Dean of Valuation, Aswath Damadran, pointed out is if you're buying Prosus to get exposure to Tencent, you potentially have, you know, this double management team risk, right? You are at the whim of 2 different management teams for your investment to work out, to play out well. So that is a risk. I'm happy taking that risk for the potential upside of owning Prosus so cheaply, right? With such a big margin between the current market cap and what I perceive as the value of Prosus. So to me, it's a risk worth taking. To Aswath, it was not. So you've got to make your own decision on that. Last one, have you read any analysis on Shinnikin Group from the SumZero free 4-day membership? I did. Yeah, there wasn't a lot extra in Shinnikin. I think the write-up from SumZero was by Mike Kruger, who's done write-ups on Shinnikin before. He had posted an article in Value Investors Club. He had presented at MOI Global on Shinnikin. So there was really just a little bit extra around the dilution event, around Shinnikin donating shares to, I believe it was a school or something. It was a charitable donation, which I guess is somewhat commonplace in Japan. It was something that seemed to get Jeremy Raper kind of up in arms around Shinnikin. I think that's a big reason he sold Shinnikin, was because of what happened around that dilution event. He kind of lost faith in management because of that. So Mike Kruger talked a little bit about his take on that in SumZero. But there wasn't a lot, aside from that, that changed in the investment thesis for Mike Kruger. So that's it, guys. I will leave it there. Pravesh says, please enjoy a cup of Joe. I've got my cup of Joe right here. Today I am sporting my Strong Woman mug. This is not for sale on my merch shop. I like the way the mug feels. Also, it's my wife's birthday. So in a way, it's a tribute to her as a strong woman. So I will leave you guys with that. I'll leave the live stream going for maybe 5 or 10 minutes if you guys want to continue chatting. I'm a big fan of that. There's so many smarter investors than me in this thread. So keep learning from each other, keep growing, keep compounding. And with that, I will see you all in the next one. Take care, friends. Bye-bye. Oh, really?